What's up, traders? Welcome back to Fides Flows, another daily market brief for gold, NAS100, and US30. So, some surprising moves have taken place in the markets, definitely some unexpected ones, of course, which kind of caught me off guard. But nonetheless, we come back to the markets, we reevaluate, we reanalyze, and we make sure that we adjust our approach. We shift our perspective to what the markets are showing us instead of what we expect the markets to show us. So with that, let's hop into gold. And I have to say my analysis for gold, incorrect. So this week I came in expecting gold to continue its bearish trend to the downside and actually respect this level at 3250. However, markets didn't do that and it continued bullish. So it is clear that gold is in a bullish run at the moment. Now, what we can observe is we have a bullish support trend line here, 3 touches, so it has been validated. Let's make that nice and blue. And then we have a break and retest level here at 3250, which was the level I thought price would turn around at. But of course, on Tuesday, markets just continue moving higher, which is okay. We just reevaluate, we come back to the markets. So, how do we know that this market is now bullish? Well, we're trading above the 50 SMA. We're trading in the bullish region of the RSI above 55 between 70, and we have bullish structure in the form of higher lows and respective higher highs. What we can see now, though, is that the market is in a retracement and it is moving to the downside. We do see a lot of momentum with it moving to the downside on this 4-hour chart. Now, on Tuesday, we had that massive bullish move to the upside. Then we followed it up with a lot of indecision candles. We had some spinning tops, some dojis, but bullish momentum prevailed and pushed to the upside. But today, we're seeing a retracement of said momentum. So we are seeing full-bodied bearish Maribozu candles currently being formed. And let's switch to the 1 hour and see what we can observe with this. Well, since I would want to say about 5 in the morning, yeah, the bears of gold have been taking over. They've been overpowering the bulls, and we've been pushing the market to the downside. So, yeah, what we can see is that markets are in a retracement. We are breaking below the 50 SMA at the moment, and we are approaching the bearish territory of the RSI, trading below 45, above 30. Now, what would I be looking for? Well, we know from a 4-hour perspective that the bulls are in control. Thus, I am just waiting for price to get down to 3250 and seeing how price reacts from there. Now, we do have a potential support level here at 3293, but I have to note the strength of this bearish momentum currently at play. We need to wait and see how it reacts to this level. Now, if price breaks below 3290, then we have an opportunity to trade from 3290 all the way down to 3250 and then wait for the long position from there, waiting for price action to kick in. Now, when I'm taking short positions, I'll be looking at the 15-minute and the 5-minute chart. I'll be waiting for a break below said position here at 3290. So waiting for a break below that, waiting for a retest, and then a further push below. Of course, the momentum and the way that this market runs, sometimes we miss positions, and that's okay. I mean, I had one long position which capitalized on the losses that I took from waiting for the short, but that's about it. And the aim of the game is to build your capital so that you can take those massive swing trading positions, so that you have enough ammo in the bank to actually maximize the moves, the major moves which you are anticipating. So for the most part, gold today seems to be bearish. I think it's going to continue trading bearish to the downside, so you can look for short positions. But tomorrow, if it hits that 3250 level, I'm going to start looking for longs, and I'm going to trade those hard. Just continuing with the gold analysis, what we can see is that price is trading, current price is trading below futures price, which is 3302. So future price is higher, which does beg the question It's moderately high. It's only 7 points higher. So price could be pulled to the upside per the futures. However, we just need to wait and see how it reacts to this level. If we get some sort of bearish signal per the 15-minute and the 5-minute charts, I would be more than happy to take a long position and ride that wave all the way back up to 3340. But patience is the name of the game, so we have to wait to see how it reacts. So that's very much gold analysis. Let's take a look at US Tech. Well, US Tech has been super bullish. We've broken levels that we didn't think we would break, and we are trading comfortably in the bullish region. Currently, we are in a bit of a consolidation phase per the 4 hours. So we can see we're consolidating between 21109 and 21432. Price is just showing a lot of low momentum moves, but it is respecting structure at the moment. And I'm not really looking to trade this market until I see a break of this consolidation. So for me, US Tech is currently just a non-starter. We are in the sweet spot region of the RSI. We're trading upon the 50 SMA at the moment. And on the 1 hour, we're trading upon the 50 SMA line. And we're just breaking above and below the 50 SMA, the 50 RSI. So this just confirms the consolidative nature that I've been speaking about. And for that reason, I'm staying clear for the time being. US30 has been doing some interesting stuff. So we had massive pushes to the upside during the week, like Monday and Tuesday. And then we saw a massive turnaround at this resistance level at 42,800. So markets moved up, tested. We had a lot of indecision candles here. We had some dojis. And we had a steady flow of bears stepping in. So we can see it started slow and then it just started bleeding. And that bleeding has continued all throughout Wednesday, and then Thursday was very much just consolidation phase, or it is currently consolidative phasing. So price seems to have found some support at 41783, which was a previous support level, which is great to see. So it means price is holding. However, we are trading below the 50 SMA and we are in the bearish region of the RSI. So it is clear from a 4-hour perspective that bears do have some standing and that the bulls aren't as in control as we would want them to be per the structure we see. Now we have broken the bullish support trend line. So this has now been invalidated. We will delete this and we will just observe what we have here. On the 1-hour chart, we can see that after that massive push yesterday at 7 p.m., markets have calmed down and we're actually very much in a consolidated nature on the 1 hour. Lots of indecision, spinning tops and dojis, and markets aren't exactly going anywhere, just sitting upon the support level. Now, I have absolutely no clue where it's going, but I'm going to base my next move upon price action. And at the moment, we are trading in the bearish region of the indicators. We are in the overextended region of the RSI towards the bearish side. And we are trading very far below the 50 SMA per the 1 hour. So, yeah, it's going to be a tough one to call because even if price moves bullish, it could just be a retracement for a further bearish move. So, market directionality right now is being called into question. And per the indicators, we can see that the bears are in control. So per 4-hour and 1 hour time frames, we can see that the 50 SMA is aligned to the bears. We can see the RSI is aligned to the bears. However, structure has shown such strong bullish momentum in the medium term that the bulls could just keep going. And we could just be seeing a strong retracement, a strong collection of liquidity, and investors getting in at a discount zone before pushing to the upside. So how would I want to trade this? Well, I would need to see how price reacts to the support level. If we get a push to the upside, I'm going to assume the bears are still in control. But if we break below this level at 41,785, break below, retest, continue down, very easy for me to keep taking short positions then. So right now we are in a waiting game for both indices. I think markets are waiting to price in the PMI levels from the news releases. But what I would suggest you do is actually go into TradingView, read some of the news outlets that are coming out there for both for gold, for NAS100, and for US30. Some of them are overlapping articles, but gauge a sentiment as to how institutional traders as well as investors are positioning themselves in this market. And then that gives you further confluence towards the trades that you do take. But as it stands, I think we are just in a very confusing space, and I'll be laying off the indices for the time being. Taking a look at VIX, you can understand why, is because the VIX is above 20 again. So we are back in that neutral territory, which is why my confusion kind of makes sense. It makes sense that I don't know where the markets are currently going because investors don't know. They've pulled out their profits and they're currently just waiting in that neutral territory, and they are not risk on, but they're not risk off either. We are closer to risk on, but at the same time, we are seeing a bullish move to the upside for the VIX, which indicates the market neutrality coming out of this. I think it would be a good idea to actually show you some of the excuse me, some of the further indicators that come out of TradingView. So let me set that up for you guys. All right, so best way to do it is actually using your cell phone. I think it's a lot easier using a smartphone or a tablet to actually read up on the news releases. But we have further analysis here, further indicators, which actually show that the gold markets are very much in a buy. Moving on to US tech. Yeah, we don't have a bias over there to use. And then US30, we don't have a bias. But yeah, this is pretty handy to actually see how investors are positioned within the markets. We can see that the buyers are still very strong in the space and use this as an extra level of confluence. It'll still work very well in your favor. But with that, that is analysis for today. I hope you enjoyed the analysis and you got some value out of it. And remember, trading is a very fluid game. You have to constantly learn, you got to adapt, but the best way to do it is to actually have skin in the game, to actually be invested and taking practical steps. But with that, I wish you all a very successful trading week, and I'll catch you in the next video. Cheers, everyone.